This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Welcome back. There are about 2,300 auctions this week. New South Wales will hold about 860 with 740 in Sydney. Victoria will hold about 980 with virtually all of them in Melbourne. Queensland will hold about 240 with 130 in Brisbane. South Australia will hold about 120 with virtually all of them in Adelaide. WA, Tasmania and the NT will hold 26 and Canberra will hold 55. Take a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 68 Delaney Drive, Doonside. This three-bedder has 2 baths, a backyard, a garage as well, and asking price $750,000. In Victoria, the top property is 24 Sandgate Avenue, Glen Waverley. Now, this 4-bedder sits on a 700 square metre block, has 2 bathrooms, asking price about $990,000. Top property in Queensland is 33 Channel Crescent 8 Mile Plains. This 5-bedder has 3 baths and a double garage. Top property in South Australia is 220 Fletcher Road, Largs Bay. This large 5-bedder was built in 2016, has 2 bathrooms, lots of parking. Top property in Canberra is 144 La Perouse Street, Griffith. This 4-bedder has 2 baths, 2 parking spots and a pool, sits on about 800 square metres. And the most viewed property on the REA Group website this week is a 2-bedder in the inner Melbourne suburb of Richmond. The address is 95 Hoddle Street, which is one of Melbourne's main roads. Now, this Edwardian-style home has been renovated, has 2 oversized bedrooms and 1 bathroom. There's a heating and cooling system, full-size laundry, video intercom and an outdoor area. The home's all about the location, close to lots of shops, restaurants, public transport and a short walk to the MCG. Asking price is $880,000, which explains why it's the most viewed. And for more on property, I caught up with Angus Moore from REA Group.
Thanks for having me, Ed. You're exactly right. Winter is typically a bit quieter time of year. We're seeing that in auction volumes. We're seeing that in listings. We're seeing that in sales. It is just a quieter part of the year. That said, volumes this year are looking relatively solid. We're not seeing the same level of auction activity that we were at this time last year. Depending on where we're looking and which weekend through winter we've been looking at thus far, we've been sort of mid-single digits down relative to the volumes we were seeing last year. So a bit slower. Part of the story there is just that last year was pretty busy, particularly in Sydney and Melbourne. And so this year, we're just not seeing that sort of really busy pace that we were last year. So broadly speaking, just a bit quieter all round.
But overall, clearance rates have been holding up reasonably well, haven't they, over the past couple of months?
Yeah, that's right. Conditions have actually been pretty good, despite the fact that we are in winter and things are a bit quieter. Clearance rates have been relatively firm, particularly in Melbourne over the last couple weekends, which is potentially consistent with the fact that there is a little bit less volume going through and, if there's still buyers around, that's helping support clearance rates. But we're also seeing that in other indicators. It's not just clearance rates where conditions look solid. Homes are still selling pretty quickly. Sydney and Melbourne have been kind of flat over the past 2 years, just tracking at pretty much the same levels in terms of how quickly homes are selling. In the smaller capitals, Adelaide, Perth, Brisbane, we have seen it come up a little bit. It's taking a little bit longer to sell than it was sort of 12, 18 months ago. But that's really a story of just how hot those markets have been over the past few years. And relative to pre-pandemic, those markets are still selling a lot quicker than they were.
All right, what about the rental market? How's that tracking at the moment?
Yeah, rental markets have obviously been one of the really big stories in housing for the past 3 or 4 years at this point. The sort of silver lining, and it is really just a silver lining at this stage, is we are starting to see conditions ease a little bit. Rent growth is still quite strong. Over the past year, advertised rents nationally are up in the sort of 3 to 3.5% range. So still faster than inflation, still faster than what we were seeing pre-pandemic, but nothing like the double-digit growth that we were seeing in 2022 and 2023. So it's still challenging for renters, but not as bad as it was. And we're seeing that in vacancy rates as well. There is a little bit more rental availability at the moment than we were seeing sort of 18 months ago, though again, it's still much tighter than it was pre-pandemic.
All right, and what about the investor side of things? We've obviously seen the Reserve Bank cut the cash rate a couple of times this year. Could be some more cuts coming just in a couple of weeks. Is that encouraging more investors back into the property market?
It does seem to be, yes, alongside the fact that rental markets are just very, very tight. That's obviously a set of conditions that's pretty conducive for investor activity. And we are seeing that in a lot of places. The number of investor loans has picked up quite a lot over the past 18 months or so, really since the RBA finished that rapid hike in interest rates. And, if we look at relative to the increase that we've seen in other buyer types, investors have been disproportionately increasing their activity. And so as a share of all new buyers, investors are sitting around the highest levels we've seen, New South Wales in nearly a decade, some of the smaller states kind of on record. So we are seeing a lot of investors in the market. Really, the only place where that's not true is in Victoria. We just haven't seen as much of a pickup in investor activity there. There's probably a few reasons you can point to for that, but one of the big ones that people have been talking about and that is probably having some impact is the fact that we have seen tax increases on investors there.
Yeah, higher taxes have definitely turned investors away from Victoria. But let's talk about the Reserve Bank, because there was some pretty good inflation numbers out on Wednesday this week, and it seems like most people are now locking in a rate cut for July the 8th.
Yeah, it was certainly some welcome news on inflation. Underlying inflation came in at 2.4%, so actually now below the middle of the target band. It is worth noting it's the monthly or partial indicator of inflation, so it doesn't cover everything that's covered in the main quarterly release that the RBA sort of most closely follows. But it is still certainly something the RBA will be looking at and still clearly very good news. It is below the middle of the target band. It's below what the RBA were forecasting. They've been forecasting inflation of 2.6 this year. And while, 2.6 versus 2.4 is splitting hairs, the fact that it's under kind of shows that the job's largely done on inflation. We are back under control, and that's no longer a bar to further cash rate cuts. And so we would expect to see them.
Angus Moore from REA Group, great to have you on the show.
Thanks so much for having me, Ed.